Good morning. CPI data comes out within 3 minutes, and it's expected to be quite scary. Current expectations are CPI month over month 0.6. Betting expectations, that is, people who bet on what the result will be and put their money where their mouth is, are expecting that number will actually come in high at 0.7%. Note, over the past 10 CPI reports, we have only come in lower once. So maybe the betting odds are right. CPI core month over month expected to be 0.5. CPI year over year expected to be 7.9. CPI core year over year expected to be 6.5. Note, I have made my own prediction. I'm hopeful that we get a month over month read of 0.4. Which is below the 0.6, and a CPI year over year read of 7.7, though you never know. So it's going to be quite interesting, and it's a big deal. Everything is based on this. See, the Federal Reserve does not need to slow the labor market if inflation falls. And there are some optimistic signs that inflation is starting to trend down. We looked at quite a few of these yesterday. We have commodities trending down. You have here, we can take a look at some of them really quick. You have underlying inflation trending down. You have break evens trending down, but if you just look at the past 2 months, we've had a little bit of an uptrend. Less pressure on ISM manufacturing prices. Some indications on earnings calls that maybe we might see an inflection. Commodity price inflation rotating down. And here are those estimates. So you've got some reasons for optimism, but big downside is obviously rental inflation. Very, very sticky. It takes quite a while for CPI to actually reflect rental inflation, inflecting to the downside. And part of that has to do with the fact that CPI is actually still going to show rent going up. It's still playing catch up. Even though market rents have started coming down, CPI is still playing catch up, even though rents have started coming down. It's pretty remarkable. All right. So we are now, this is a big moment. We can see some big changes in price here. I mean, you see the S&P swing probably 2% in either direction. Unless it's really bad, then we'll go -5. Ugh, big moment. If you're in the market, you want low. If you're not in the market, you want high. All right, here we go. About 10 seconds away. I'm going to read off the month over month data first, which we're expecting to be 0.6. And here it comes. Month over month, 0.4. Let's go. Holy shit. Year over year, 7.7. I was right. It comes in low. Oh my God. I fucking nailed it. Oh, that's so good. Yes. Oh, good. Oh my gosh. Sorry. That is so freaking good. We got to get that report up. That is, oh my gosh. That's really, really good. Finally, basically all of the bank expectations were wrong. They were all high. Wow. This is incredible. Let's go ahead, and I just want to get the CPI report up, and then we're going to go through some of the details here. But this, again, headline here is great. Headline is year over year 7.7. That's below the 7.9 survey. The 0.6 CPI month over month comes in at 0.4. Core month over month comes in at 0.3. This is great. Finally, a cooling, a relaxation. I want to see how treasury yields are moving on this. Treasury yields down like 16 basis points. That's not a surprise to me. I was expecting treasuries to plummet. If we had a soft report today, that is treasury yields to plummet, so the bond market actually rallies on this. Wow. That is incredible. Okay, looking at what some of the suits are saying here. So gold is up 1.1%. Good news at last. Core pace of inflation down notably on a monthly basis. Core, yep, okay, we talked about the estimates. All right, good. Let's go to the actual report. Wow. This is incredible. So, wow. Okay, that's crazy. Here it is, folks. Look at that, 0.4%. I swear I didn't see the report before. This is crazy. Like, that's so crazy. Index for shelter contributed over half of the monthly increase. Yeah. So this is the sticky one that's left, folks. I mean, this is so good because this is really telling us that inflation's like, as if we can reiterate this in December, Jerome Powell can just take the stick out of his butt. Like, seriously. Okay, with the indices for gasoline and food also increasing, the energy index increased 1.8% over the month as the gasoline and electricity index rose, but natural gas index decreased. The food index increased 0.6%, with food at home rising 0.4%. So you're seeing that restaurant inflation still pretty strong right here. That's about a 7.2% annualized rate, right? So you're seeing restaurant inflation strong. You're seeing a little bit of a move up in energy. And you're seeing a little bit of move up in probably shelter here. But if you take out food and energy, you're only up 0.3%, which is great. The biggest risers were shelter, motor vehicle insurance, new vehicles. Still, are you serious? New cars still? Indices that it declined were used cars, trucks, medical care, apparel, airfare indices. All right, let's see what we have here. I want to get into the tables, but you know what? We'll start with these tables first because then I can just look at the overall categories here. All right, so fuel, oil, wow, up 19.8% here going into the winter. This is October, seasonally adjusted change from the prior month. So you've still got these crazy moves in energy here, right? And again, look at this food away from home number, 0.9%. That's remarkable. That's really, really high. So you're seeing, again, restaurant inflation, energy inflation, new vehicles. How are new vehicles still moving up at 4.8% annualized? But look at that plummet in used vehicles. Let's go. That's good. Negative 2.4%. I was talking to some equipment sellers yesterday, and they were talking about how it feels like in this last quarter we hit a wall with equipment sales and price drops are coming. Wow. Shelter comes in at 0.8. Yikes. That's quite high. That's quite high. 0.8 on shelter. I mean, we were expecting that to stay flat. That is the market, like banks and stuff. We're expecting that to stay flat at 0.7%. And coming in at 0.8% is pretty high. This is the first negative that we've had here on healthcare, medical care services. Look at that, minus 0.6. This is really good though about core. It really shows you that it's rental and shelter inflation that is slowing down. It's good. I'm going to go ahead and pull up a more detailed chart. Remember that a lot of this has to do with let me put it this way. We still have a December meeting to go, or a December CPI report to go, right? This is a really great sign, but we've got to get the December meeting done, or the December CPI report in right before the Fed actually makes a decision for inflation or for rates rather in December. We're expecting, it looks like bets right now on a 75 basis point hike are actually falling. So we've got downgrades right now on that. Oh my gosh, look at some of the market moves. This is crazy. And then I want to get into that detailed chart. But look at this explosion here. Tesla all of a sudden up 3.6%. The Nasdaq's up 3.6%. Coinbase is up 9%. Bitcoin's up almost 10%. Look at Bitcoin run to the old fib line that we had here at 17.5. This is quite remarkable. Let's see here. Looking at the after hours, Open Door even up 10%. My gosh, only a couple things red here, like DWAC. Oh, geez. All right, let's go to the actual breakdown here of the categories. It really, I mean, shelter made up 50% of the hike here. 50%. All right, so let's see what we have. I don't really care so much about the individual food items right now. I want to look here. Food away from home. What is the part that really went dirty here? Hold on, let's get our column here correct. So we want to look at the seasonally adjusted, which is the rightmost column. And then if we wanted to look at the unseasonally adjusted, we could look at the third column. But we'll mostly probably look at the last column here. All right, seasonally adjusted food, service, meals, and snacks, 1.1%. Food at employee sites and schools, 3.8. So it looks like really food service. So basically, again, restaurants, explosive here. Wow, vending machines really getting expensive, as well as schools and employee sites. All right. Well, we saw Facebook change their dinner schedule to try to avoid how much people are eating. Try to save some costs. They're really cost cutting now. All right. So window coverings up 0.5%. Look at how many minuses we're actually getting here. This is really good. Household furnishings and supplies down 0.2%. That's 2.4% annualized. Remember, you multiply it by 12 to get an annualized figure. You do not get exponents involved into this. I feel like I have to have that debate every time in the comments. Laundry equipment. Look at that equipment. The equipment sector going down 7.9% on laundry equipment. That's insane. Major appliances down 0.1. Appliances in general down 0.5. That would include like coffee machines versus just like dishwashers and larger things, right? Furniture and bedding down 1.2%. Other linens up 1.9%. So you get a little bit of flex here. Window coverings, floor coverings. Good. Starting to see that construction, that residential investment sector kind of slow down a little bit. Good. Tools, outdoor equipment, 0.4%. Tools and hardware, a little bit of a pop here, a little bit to the upside. Housekeeping supplies, it's a little rich as well. But look at this. You're getting some negatives over here. Negative 0.7 on apparel. Men's and boys apparel, 0.6. Men's suits, 2% to the downside. Shirts and sweaters, 2.4%. Women outerwear down 3.8%. I mean, you're seeing some decent negatives. There are some positives as well as here. Men's pants, underwear for women. Underwear for women getting more expensive. Infant, toddlers apparel going down. Very good. I was using purple. Look at this. This is all negative here. Everything's negative in this sector right here. Everything is negative. That's great. I'm very surprised that new vehicles are still going up, but you see that they're actually going up at a lower rate here. You're at 0.4 as opposed to the 0.8 or 0.7. Used cars and trucks, nice plummet. Really good plummet here. That's great. You've got medical care commodities, 0. Recreation, video equipment going down. Okay. Audio equipment going up. I mean, some of these individual levels going up don't matter so much because their weight is like so nominal. This is the weighting, right? So it's like the weight for audio equipment is only 0.07. Whereas if you go over here and the weight for used cars is 3.8 or new cars is 4, right? And then they group it together. So the weightings are relatively important. So if you see some certain numbers that stand out, it's not that big of a deal. But I mean, look at all this negative. This is a lot. I mean, this is really what we've been waiting for. It's just some real neg. And then really the only thing left is that stupid rental inflation. Wow, yields on treasuries down like 0.2%. I knew it. I knew they would freaking plummet today. Well, on a miss. I'm like, it's going to be a huge drop in treasury yields. But I mean, that's good for stocks. So computer software and accessories, smartphones. Look at that. This is the problem you've got with Apple and less smartphone shipments, down 5.9% month over month on smartphones. But unfortunately, folks, sorry to say it, but alcohol is getting a little more expensive this last month. I don't know what, good thing I basically never drink. Good thing. Tobacco's going down as well. Well, actually not as well because it's the opposite. Tobacco's going down. I've never tried a cigarette. Personal goods, stationery supplies. Ooh, stationery, gift supplies getting expenses, but they're so small. They didn't even give that category a weighting. Rent of shelter. Oh, seasonally adjusted, 0.7. It looked like they were saying 0.8 on the primary or on the headline there, but we'll see. Other lodging away from home, hotels helping you drag this up. Lodging away from home. These are huge moves right here. Big moves. You put that together right here. That's about 1.5 on top of this rent of primary, which comes in at 7.3 as a weighting. And then you've got owner's equivalent rent here. Oh, look, owner's equivalent rent actually came down a little bit on the seasonal. That's good, but still very, very high. I don't think these other things matter so much. This is a great opportunity, by the way, for House Hack. This is a great time for you to hop in and make sure you are an investor in House Hack if you're accredited. And of course, check out the programs on building your wealth with that Black Friday coupon code link down below. It's 60% off, folks. 60% off. It's the biggest coupon code we've ever done. Pet services, 0.7, a little bit to the upside here. Take a peek also what the suits are saying right now. Deutsche Bank, not to overemphasize the 0.3 increase. He points out we've seen that before. Well, of course we have, but we're looking at inflection point. Why do you got to be a Debbie Downer, you jerk? Let's see. Knee-jerk reaction in Treasuries market. The market paired expectations for the terminal rate for the Federal Reserve's hiking to just under 5% now. Woo! That's a good day. Admission to sporting events down a little bit. What else? Admissions in general up. Delivery services down 1.5%. Has a smaller weight, though, than postage. Postage running up here. And postage overall up a little bit. And getting to the end of the chart here, personal care services, 0.4. Nominal apparel services, 1.4. Okay, whatever. So this is very good. I mean, a very good decline. The expectations that I had yesterday, I wrote down somewhere. Well, these were the market expectations of inflation, right? And then we wrote my expectations down right here, and I'm honestly, like, personally blown away because nobody was coming in with these numbers, these expectations. I mean, look at the banks. All of the banks. Oh, you did actually have a couple banks. Wait, CPI month. Oh, no, CPI month. None of the banks came in at a CPI month over month of 0.4. They were all 0.5, 0.6, 0.7. So you could see that pessimism there. Core, we had some 0.4s. But yeah, I'm a little bit blown away that what I wrote down is exactly what we got. And then core actually came in at 0.3 for core, and then core headline year over year came in at 6.3. It's really, really cool. So now the JP Morgan analyst suggested that we had a 20% chance of coming in at 7.7, and they suggested the S&P 500 could move by about 2.5 to 3%. And it appears the S&P is up 3%. Wow, the market is not rigged at all. S&P is literally up 3%. Tesla's up 5%. Coinbase up 8%. Still got a big overhang though on the crypto space here. Robinhood up about 6% right now. Trade Desk popping 8% on this news here. I mean, everybody was waiting for the inflation numbers. You know, you have to say it just makes sense. Like, why would you buy if you're an institution right before the CPI release? I mean, all you're doing is saying to your investors, you're gambling, right? So if you have a fund, you're like required to wait for the CPI numbers, and then you just sit here and buy. It's crazy. Someone here says, don't we always spend less right before the holidays? You know, it's not so. This is not a spending report. This has really little to do with consumer spending. It has to do with pricing set by stores. Now, sure, pricing could inflect down if spending is very, very soft, but it'd be a little. I feel like it would be odd to see such rapid and quick repricing at retail. Although I could be wrong about that. But I see what you're saying. It's like you save money in October, so that way you have money for the holidays or something like that. And last year was so interesting. So anyway, wow, this is really good. It's really, really good. So congratulations, everyone. I'm very, very, very shocked. Yeah, congrats. This is great. I'm going to change the title now. All right. Goodbye, everyone. Use the profits you're making today on the courses. 60% off. And I'm adding so much more value by filming almost every single day new lectures to all of the courses. But if you're looking to start a business or just make more money, Elite Hustlers is for you. It's basically going to have like a monthly boot camp aspect to it, which is really cool. And otherwise, get into Zero to Millionaire Real Estate Investing. It's probably the most popular right now, followed by Stocks and Psych. All right, see ya. I love y'all. Bye.